Good afternoon, good evening, everybody. I guess it's probably not good evening because it's good afternoon for me and I'm currently on the East Coast, but just want to
Right.
say welcome everyone to today's live. As you know, every single week, it is my goal to bring you an expert in the field of finance in some way, shape, or form. And I'm very excited to get to introduce you to not only a good friend, but a business partner that's been working alongside me for the last few years. And he is an expert when it comes to pretty much everything IUL was a dis I would just say a very not a big fan of whole life for a very long time, has since kind of changed his opinions and changed his view on that product. And he's going to be sharing with us today a little bit about why an IUL might make sense or why a whole life might make sense depending on the client. So I'm excited to introduce you to Mr. Ryan Rush to my right, possibly your left. Ryan, I appreciate you for joining us today. Johandra says, Hola. You guys are welcome to put into the comments below where you are dialing in from. And if you are, we just hopped up to 21 viewers. Awesome.
Yeah.
But Ryan, if you want to go ahead and say hello.
Yeah, what's going on, guys? I've never been live on YouTube. I didn't even know there was comments. I didn't know if there were comments on here. And then I saw a few comments pop up, so that's super cool.
Yeah. People can make comments and all that stuff. We can have a little dialogue back and forth, which is great. And if you can, I would love for everybody to hear your story and get to hear a little bit about you and kind of what got you into the industry, how you got into working with IULs and whole life and that whole sort of thing.
Yeah, no doubt. So I got into life insurance probably like 3 years ago. And wait, what was your second question right after that? How long I've been?
Yeah, how long you been in the industry, what got you into the industry,
Mm,
and kind of how you found out about IULs and all that
yeah,
stuff.
yeah, yeah. I really, really, really wanted to get into real estate. That's all I really cared about was getting into real estate. I found a lot of real estate mentors. Back when Clubhouse was a thing, did you ever jump into Clubhouse?
I had jumped into a few, but I was never big on it. But yes,
Okay.
I have
I was
participated in
super I
Clubhouse.
was super big on Clubhouse. I loved Clubhouse. I thought it was super cool because it's like a live podcast with like a ton of people.
Oh, wow.
Um, and
Yeah.
so like that's why I loved it. And I would jump into all of the real estate clubhouse rooms, and there were a ton of them, and I would join like groups and clubs in Clubhouse that would just talk about real estate. And I found a ton of real estate mentors. And then from there, it was just a matter of like making connections with real estate mentors, asking a lot of them how they got into real estate, how they made money to start getting into real estate, all these things. And so many of them were saying that they got into financial services first. They learned about how money works. They learned about, just general finances and everything like that. And then they kind of pivoted and got into real estate. And I had like 6 or 7 real estate mentors, but yeah, so all these real estate investors were talking about getting into financial services, and I was like, I don't really know what that means. I was 19 years old and just trying to like learn everything. And then from there, I just got really close with one guy, and then he brought me into the business, taught me a lot, and yeah, that's kind of how I got into the business. Was from that connection, and then from there, the reason why I started learning so much about IULs and just cash value life insurance is because a lot of these real estate investors were using it. And I was like, I have no
Mhm.
idea what this is. How are you becoming your own bank? How are you borrowing from a life insurance policy to invest in real estate? I thought that was very intriguing, learned a lot about it, and then now I help people do that, which is super cool.
And one thing I'll say that I love about you since we first met, which I don't know, it's been at least 2 years, maybe slightly longer than that. Was the beginning of 2022, if I'm not mistaken, right? I think it was 2022.
Mhm.
One thing that I always respected about you and your journey in this industry is the fact that you're a self-study. Like you're a self-learner, you figured it out on your own. Yeah, you had kinda had coaches when you first came into the industry, but not really so much. Like
Yeah.
you really did a lot of work on your own to figure it out. And to see people put that kind of energy and effort into it, I just have a lot of respect for that because I know it's something that there's a lot of information out there about all these products, and it's really hard to kind of decipher what's right, what's wrong, like how to figure out what types of products and services work for different people. So I know for me, I'm fortunate enough to have had coaches,
Mhm.
but I know you didn't necessarily have that for the first year of your career. So that being said, now kind of being full force in the insurance industry and working a lot with cash value policies, I'm curious kind of your take on everything. Like, I guess getting into the industry and seeing, okay, let's actually first back it up. Let's first start with IULs. because I know that you were first a very big fan of IULs, not a big fan of whole life. Why so?
Yeah, to be super transparent, the companies that I was with didn't offer good IUL, not participating mutually owned whole life companies. So it wasn't really, there was no opportunity for me to really learn those products or to even take a deep dive and run illustrations on those and everything like that. But I was very accustomed to, and I knew a lot about the IUL, and so I knew about that product. So that was the product that I would talk about, especially on this page. Most of the followers have gotten from this page, or I guess like the subscribers from this page, are people who were looking for information about IULs, and that's how they found me, right? Because they're just
Mhm,
Googling and doing information. They're doing their due diligence about our products and services, and then my videos pop up, right? That's the biggest reason why I wasn't posting or wasn't offering whole life, was because of that. And I didn't really fully understand it, right? And I'm not going to offer people a product that I wasn't super knowledgeable about, right?
mhm.
Um, and I really, really, really believe in the IUL. It's a great product. I have two of them, and I've invested heavily in real estate, and I've leveraged my policies, and I love using the IUL. And now that I know a lot more about whole life, I have a lot of gentlemen on my team that really, like, 90% of their business is whole life business, and I've learned a lot from them. And now understanding both of them really in depth, that's why I'm now like, I really enjoy using both products.
So you're kind of making a shift. What was the
Yes.
first, I guess I should say, either who do you attribute it to, or kind of what was the first thing that really started to shift your mindset? Like, whole life isn't as bad as we all think it is.
Yeah, our brokerage did a training on our whole life company, and I sat on that training. I listened through the entire illustration. I saw the illustration, how it worked. I went in there and did a deep dive and just started playing with the illustration, playing with numbers, and I was like, "Oh, this looks awesome." And also just getting so many clients, real estate investors, who want to dump in 500K, 300K, 100K, and take that money right back out to go disperse, or to go and deploy into the next deal. And I couldn't really do that with the IUL. Our clients would really only get like 60% of their available cash value in year one. And some of these companies, you can't take out loans for the first 2 years, for the first year, and things of that nature. And so it was really holding my business back. It was holding back my ability to help real estate investors,
Yeah.
only using IULs. And so that was a big reason why, is because I wanted to be able to help those clients who wanted to dump a ton of money in and then immediately turn around and deploy those funds into the next opportunity. The other thing is because I brought on two business partners, Anthony and David, and they, again, write pretty much all whole life. And there are so many stories and clients that they've helped that they told me about, and I was like, dude, that makes so much sense as to why whole life is just the much better product for that individual person's situation and scenario.
Mhm.
And so again, the big shift was just getting a much deeper understanding of how that product works, and two, not being one dimensional. Right, I wanted to be multi-dimensional to where I could help out many people's different situations, and not only try to help one type of situation, if that makes sense.
No, it does, and I mean, I'm guilty of it. I think we all are, all the people. It's kinda like you're either like a whole life junkie or an IUL junkie is kinda what we would say in the insurance space, or you're a term LB junkie, right? Or termite, as they would call it,
Mhm.
and I think you just get very used to working with a specific product, and guilty of it as well, just because we never had access to a really decent whole life, like, nothing to really be excited or learn about it. I think, and you can correct me if I'm wrong, but most of the companies we worked with in the past, they give you what, 5% interest? It's like you can go and get that in a high yield savings account today. You
I
don't need
know,
that in a whole life policy, let's be real. Now, okay, you can't do
especially when the
arbitrage and
loan
infinite
is
banking.
5.75%.
Correct. Oh,
So now
yes,
you're
that
at a
too.
negative arbitrage,
Yep.
right? Um, which is obviously not ideal, right? If
Yeah,
you're, if you're trying to really maximize the company, right? So me and on my channels and my stuff, I'm super transparent about the companies that I use and everything like that. Like, I run illustrations, I share all that stuff. I don't really hold it back at all. I just show everything, just because, like, I like the transparency there. And so, like, Foresters, dude, like, 4% interest on loans. They've been paying out a dividend of like 6.8 to 7, still like 7.2%. That's really, really good compared to Mass Mutual, Penn Mutual, and a lot of these other companies, Lafayette. Like their
Mhm.
interest loan on these loans are almost 6%. They're 5.75. And if you're paying a 2%, 3% guarantee on that, the second you start actually using the infinite banking concept with those types of companies, you're instantly at a negative arbitrage. And so I didn't like that. But Foresters, it's quite the opposite, which is awesome, which I really, really, really like.
And from what I've learned, they're at a pretty solid, what, like 6.5, 7% on average, kind of consistent return, which would be
Yep.
your fixed rate plus your
Mhm.
guaranteed rate, all of it together
Yeah, what's nice
combined.
is Foresters is super transparent about the dividends that they've paid out every single year for the last 65 years. And so, yeah, they're consistently paying out like 6.8, 7, 7.2 with dividends. They're 4% guarantee, so they have the highest guarantees, 4%. Most whole life companies were at 4% guaranteed, but a lot of them have moved that back to 2% or 3% guarantee. So
Yeah.
Foresters has some of the highest guarantees in all of the participating mutually owned whole life companies, which is awesome. And again, they have the lowest cost of the loan as well, which is awesome.
Yep. And good to see you, Mr. Jonathan Larico. We see you on. We're waving to you. Funny, Ryan just asked me about you, what, 2 days ago? He's like, where's
Yeah, I was
Jonathan
like, dude,
been?
where's Jonathan at? You've been
So
MIA, brother.
we
Or at
miss
least on,
you.
on my radar. Amanda was like, no,
I'm
Jonathan's
like,
doing his
"Mm,
thing, and I'm like, I,
Jonathan."
I I just haven't seen his name much.
So John, that means you got some work to do.
You got to put up some
Uh,
numbers, brother.
you got to do something. Got to do something, something. He's gonna have some numbers coming soon.
Good
Um,
guy. Good guy.
but in regards, so I question in regards to it. So how would you know? Like, let's say you sit down with a client because you mentioned earlier the fact that you felt like you were losing clients, right? There was clients that you couldn't help with the IUL. I know I have turned clients away. Cannot tell you how many times I've sat down with people that are like, I want to put in 150,000 in cash,
Mhm.
like like front load in year one, and I want to get it all right back out to go do real estate investment. That's the
Mhm.
common question. And unfortunately, like you said with IULs, the highest access I've found in an IUL in year one, depending on your age, is roughly 65 to 67%. And that one's with Anico. So that's not fantastic if you're trying to get the whole thing right back out, even though it's relatively pretty good compared to other IULs. So whole life can get you access to what, like 90, almost 92% or something like that in that first year.
Yeah, yeah, it's in that first year, absolutely, like 96% right away with Foresters, which is super cool. And that just helps out so much with especially these fix and flippers.
Hmm.
A lot of these people, they'll dump in. And what's nice too is like, all right, if you throw in let's just say 100 grand, and
Hmm.
you're about to go do a flip, and you pull out $40,000, right, to do that whole rehab. You're totally within like that 90 to 96% threshold right there, right? A lot of other people too, who I'll come across, deploy the whole thing. Like they want to dump in 100 and damn near take 100 right back out. I could never do that with an IUL, but with whole life, now having the opportunity and being able to do that has changed my business a ton and has just changed the way that I'm able to help people, which is awesome.
So then question, let's say that you come across a client where maybe their goal isn't necessarily to get money out right away. Like they're okay with leaving some money in there, letting it kind of set, maybe 5 or 10 years, and they want to see like some income in retirement, but they also want some access to it over the next couple years. Would you say that whole life could would it compete with an IUL in terms of a supplemental retirement income product, or it's
No.
more so just better
Okay.
for your clients want access quick?
So the biggest thing that I look for when determining whether somebody is a better fit for a whole life or an IUL are these simple things. So essentially is how fast and how much money are you looking to take out right away, right? If the answer is like, hey, I'm just looking to build my way, I'm trying to build my wealth. I'm not trying to
Mhm.
scale my portfolio. Or if you're trying to build a portfolio and if you don't already have established portfolio, and you're looking to build that and you're not just trying to scale it, then IUL definitely makes way more sense for you. So you hear and you get a lot of these comments that's like, this only works for the rich. I absolutely agree with you if you're talking about leveraging infinite banking concept with whole life policies, right? Because if you want to become your own bank to go buy a car or to go buy a piece of real estate, you need that cash in hand, right? You need to go be able to buy that $100,000 truck in cash and then pay yourself back and become your own bank, right? You're becoming your own bank. You're lending yourself that money to go buy that truck or that car, and then you're paying yourself back on a no term loan at 4%. Right? If you're somebody who does not have that type of cash, then that's not really going to work for you. If you don't have 300K to dump into a whole life, or 100K or $1 million to dump into it or what I say, I think I said the wrong thing. So I think I said 401K when I meant to say whole life.
Yeah.
If you don't have
Yeah,
all
yeah,
that
no problem.
cash, if you don't have all that cash to dump into that whole life product and then to pull all that money out, then it's not really going to work for you. If you're somebody who's like, I need to be putting in like, 1,000 a month, 2,000 a month, $3,000 a month, then the IUL makes more sense for you because it's already going to take you time to build up to a dollar amount where you want to then borrow. By the time you've built up that nest egg that you want to borrow against, then at that point in time, you're going to have way more access than only 60% in year one, right? You're going to be closer to 70, 80, 90%, right? Um, and a couple other things too. If you want retirement income, IUL is way better than whole life for that. If you want to earn a higher yield on your money, IUL is definitely better than whole life. And so those are kind of the main things that I look at. How much cash do you have in hand? How fast are you looking to leverage or deploy that cash? And like, what are your goals? If like you're already super established, you have a ton of money, whole life makes more sense. If you're looking to like play more of the longer game, then IUL makes more sense. The biggest thing that I say to all my clients is like, a whole life is like a checking account on steroids, and IUL is like a savings account on steroids.
I like it. So I was gonna ask a question in regards to that. So then it sounds like I or whole life doesn't have the same like surrender schedule that we have to battle with an IUL.
No, it does not have that same surrender schedule at all.
So that's what gives us access to money faster. Is there
Right.
ever a point where you could take 100% out of the whole life, or would you always recommend no more than 95?
You can absolutely take that money out because what's nice is that there's a lot less risk in the whole life because you can take if you have 100% access, after 5 years,
Mhm.
then and also the break even point is sooner in whole life policies too, typically 5 years. And so because you have that guaranteed 4%,
Mhm.
you can take out 100% of your surrender value and you don't have to worry about a 0 year impacting that because you have that guaranteed 4%. No matter what the stock market does, you have a guaranteed 4%, right? With the IUL, to take out 100% of whatever your surrender value is, it's not the worst thing in the world because even if you do have a 0 year, that money is just coming out of your cash value, which isn't optimal. It's not the best circumstance. However, um, it does just take a little bit longer for you to get rid of that, surrender schedule, typically 10 to 15 years.
Mhm. And that's what makes it so hard for you to get access to a big percentage of your money, right? And I'll say, like, I mean, I've definitely, put people into IUL policies, and that stuff just has to be explained. Like, if they're going into it, they have to know what the surrender schedule is, which is the amount of time that you don't have access to your full cash value. Whole life, you have a lot more flexibility in terms of how quickly you can get to your money. And is the process still just as easy in terms of getting the money out?
Yeah, it's super easy. So I mean, like, I could call for you. You could call. It's just like going to a bank, initiating a wire transfer or like filling out a withdrawal slip,
Form.
like at the bank. Same thing. You just fill out a form to initiate a loan, and then the loan gets sent.
Oh, I like it. So it sounds like for clientele purposes, possibly like your real estate investors, your bigger portfolios, those are that want access to the money really quickly. Because you
Mhm.
can do large lump sums into IULs, like you can spread that out over 4 or 5 years over that 7 pay period, and you're just fine. But again, if you're trying to get to a certain sum, that's where you might struggle in the first couple years. Yeah.
Yes, yes, and also just if you're somebody who doesn't want to be bound or locked into an X amount of premium and you like that flexibility, again, an IUL makes a lot more sense
Yeah.
because with whole life, you have to be paying that X amount of dollars per month, right?
That
You're
was
not
gonna
locked.
be That was gonna actually be my next question. Let's say that you come across somebody that wants to do, let's say, 200,000 into a whole life. Do they gotta do that every year for a certain amount of years? Can they just do that one time? How does that work?
Yeah, so you can do one-time lump sums for sure. But typically it makes more sense to continue to keep doing that on like a premium
Mhm,
schedule instead of just a lump sum. Um, but yeah, typically again, if you are somebody who has a ton of money and you are able to dump 200K in year one, you probably can continue to keep dumping 200K every single year, especially if you're deploying that money and flipping that money and
mhm,
turning that 200K into 400K or turning that money into whatever it may be, then yeah, it definitely isn't that big of a deal for you when you have that type of money. That's why, like, again, for more beginners, people who are trying to build wealth, the IUL is the much better suited product for you if you're somebody who already has a ton of cash, especially private money lenders. Whole life policies for private money lenders is like ridiculous because private money lenders just sit on a ton of cash and they go give their cash to other people and charge them interest to have them flip that money, right? And so private money lender is becoming their own bank. However, that cash is typically just sitting in a checking or savings account.
mhm.
Um, Not outpacing inflation. They're losing purchasing power on that money, but they're kind of making that difference back by charging people 18% interest on that money. Right? That's typically what we see is, if a private money lender gives me a ton of cash to go do a deal, a private
Mhm.
money lender is typically going to charge me 18 to 20% interest. And so if a private money lender is using a whole life policy, they're getting that guaranteed 4% on their cash. They're only charging themselves 4% to take that out, and then they're still charging that other that other 18 or
On top of
20%
it.
to go have somebody else borrow that money. And so you can, as a private money lender, you can do private money lending even better, smarter, faster, and safer with whole life. If you don't want to use a private money lender and you have cash, then again, you should become your own bank by using a whole life policy. Oh, snap. What's up, Don? Amanda disappeared on me, guys. Um, well, hopefully Amanda can. Oh, there we
I'm
go.
here.
Oh,
I was getting a
nice.
phone call over you even though you're on do not disturb. I don't know how that happened.
Yeah.
Weird. Weird. But what I was saying to be lose Amanda, I'm here. I'm here. I'm here. But what I was saying was I have been a big fan of the be your own bank strategy for a long time. Whether you're using whole life or IUL, I tend to talk just in general about cash value life insurance, which I know you do too,
Hmm.
because it really just depends on the client. And
Hmm.
that's why we wanted to do this live with you guys today because there is a lot of misinformation out there about both products and they're both fantastic and they both serve different needs. It really just ultimately depends on the client and what you're trying to do, right? Like, and of course, approval. I mean, from what I've heard, I think whole life is a little bit easier to get approved for than IUL policies. The insurance and the underwriting tends to be a little bit stricter. I don't know if you've seen that with Foresters or any of the companies that you've worked with.
I would say, yeah, it's typically, kind of the same.
Similar?
I haven't, yeah, I would say they're pretty similar.
So then the key is you guys just got to figure out how you want to fund it. You got to get with somebody that is local where you live, that's licensed, that can sit down with you and kind of go over a little bit about what your goals are. And I think this time we lost Ryan, probably the same you guys just lost me. He's back. He's back. He's back. But you got to
Yeah.
get with somebody that you're back. Yay. That is local where you are, that's licensed, that can share with you guys a little bit more about the different types of products that are out there, help walk you through your goals and figure out which type of account is going to make the most sense for you. So, both Ryan and I are here in the United States. I know I've seen a couple people jump on today that are saying they're from different countries. Unfortunately, a lot of these products are not able to be done in the UK or done in other countries. So, you got to have some kind of tie to America for that. But Ryan, I'm curious. I think you're frozen. Can you hear me?
Yeah. I don't know why I'm frozen, but hang on. Are
Weird.
you seeing my laptop right now?
No,
It's just a
I
frozen
just,
of my face.
it's a frozen of you.
That's so weird. Yeah, I don't know why I'm frozen. That sucks.
But I can hear you, which is
Okay.
good. It'll probably shake out here in a second or 2.
Yeah.
But I am curious, if anybody wanted to connect with you, what is the best way for them to reach out to you?
I would say you can click the link in my bio on any of my social media. Most of my so like my Instagram and everything like that is official Ryan Rush, and
Mhm.
then on YouTube It's at Enhanced Wealth, and so I would say the best place is just to click the link in my bio on any of those platforms, or you can just DM me on Instagram if you have like specific questions for me.
Love it. And you guys, I will put his contact information in the description of this video. This will be saved. You guys can go back and reference it. We recommend you share it with anyone else you can think of that's also in this space and wanting to learn more about whole life versus IUL and which one's better and how to specify it. Because I think this video will give you guys a lot of really great content, and hopefully a lot of education around it just for yourself as an agent. And so, Ryan, if anybody does reach out, usually what I tell people to do is if you do reach out, just let us know that you were on this live. Like say, hey, Amanda, hey, Ryan, I was a part of the live that you guys did. I want to learn more. Would you be open to doing a complimentary client consultation with them at no cost if they say that they were a part of this live?
Yeah, of course, 100%.
Okay. Awesome, because I will do the same thing. So if you guys have any questions, just again reach out to us. Let us know that you were here. I will link Ryan's contact information in the description. And we're just super grateful that you took time away from your business and your team to chat with us today. And any last words as we're wrapping up?
If you want to learn more, I have a ton of YouTube videos on my channel
Yes.
about cash value life insurance and even real estate and everything. If you guys want to learn more right now, we're going to go live on Instagram. So just move over
Yep.
to Instagram and we're going to continue the conversation over there.
We will be on IG. So we will see you guys on Instagram. Thank you again for everybody that joined and participated. We love it. And we will see you guys in a few minutes on a different platform. Everyone have a great night.